What is the Forex market? The foreign exchange market is where currencies are traded. Currencies are important because they allow us to purchase goods and services locally and across borders. International currencies need to be exchanged to conduct foreign trade and business. If you are living in the United States and want to buy cheese from France, then either you or the company from which you buy the cheese has to pay the French for the cheese in euros, EUR. This means that the US importer would have to exchange the equivalent value of US dollars, USD, into euros. The same goes for traveling. A French tourist in Egypt can't pay in euros to see the pyramids because it's not the locally accepted currency. The tourist has to exchange the euros for the local currency, in this case the Egyptian pound, at the current exchange rate. One unique aspect of this international market is that there is no central marketplace for foreign exchange. Rather, currency trading is conducted electronically over the counter, OTC. Which means that all transactions occur via computer networks among traders around the world, rather than on one centralized exchange. The market is open 24 hours a day, 5.5 days a week, and currencies are traded worldwide in the major financial centers of Frankfurt, Hong Kong, London, New York, Paris, Singapore, Sydney, Tokyo, and Zurich, across almost every time zone. This means that when the US trading day ends, the Forex market begins anew in Tokyo and Hong Kong. As such, the Forex market can be extremely active anytime, with price quotes changing constantly. A brief history of Forex. In its most basic sense, the Forex market has been around for centuries. People have always exchanged or bartered goods and currencies to purchase goods and services. However, the Forex market, as we understand it today, is a relatively modern invention. After the Bretton Woods Accord began to collapse in 1971, more currencies were allowed to float freely against one another. The values of individual currencies vary based on demand and circulation and are monitored by foreign exchange trading services. 2. Commercial and investment banks conduct most of the trading in Forex markets on behalf of their clients. But there are also speculative opportunities for trading one currency against another for professional and individual investors. There are two distinct features to currencies as an asset class. You can earn the interest rate differential between two currencies. You can profit from changes in the exchange rate. An investor can profit from the difference between two interest rates in two different economies. By buying the currency with the higher interest rate and shorting the currency with the lower interest rate. Prior to the 2008 financial crisis, it was very common to short the Japanese yen, JPY, and buy British pounds, GBP, because the interest rate differential was very large. This strategy is sometimes referred to as a carry trade. An overview of Forex markets. The FX market is where currencies are traded. It is the only truly continuous and non-stop trading market in the world. In the past, the Forex market was dominated by institutional firms and large banks, which acted on behalf of clients. But it has become more retail-oriented in recent years, and traders and investors of many holding sizes have begun participating in it. An interesting aspect of world Forex markets is that there are no physical buildings that function as trading venues for the markets. Instead, it is a series of connections made through trading terminals and computer networks. Participants in this market are institutions, investment banks, commercial banks, and retail investors. The foreign exchange market is considered more opaque than other financial markets. Currencies are traded in OTC markets, where disclosures are not mandatory. Large liquidity pools from institutional firms are a prevalent feature of the market. One would presume that a country's economic parameters should be the most important criterion to determine its price. But that's not the case. A 2019 survey found that the motives of large financial institutions played the most important role in determining currency prices. Uses of the Forex markets. Forex for hedging. Companies doing business in foreign countries are at risk due to fluctuations in currency values when they buy or sell goods and services outside of their domestic market. Foreign exchange markets provide a way to hedge currency risk by fixing a rate at which the transaction will be completed. To accomplish this, a trader can buy or sell currencies in the forward or swap markets in advance, which locks in an exchange rate. For example, imagine that a company plans to sell US-made blenders in Europe. When the exchange rate between the euro and the dollar, euro to US dollar, is €1 to $1 at parity. The blender costs $100 to manufacture, and the US firm plans to sell it for €150, which is competitive with other blenders that were made in Europe. If this plan is successful, then the company will make $50 in profit per sale because the euro to US dollar exchange rate is even. Unfortunately, the US dollar begins to rise in value versus the euro until the euro to US dollar exchange rate is 0.80, which means it now costs 80 cents to buy 1 euro. The problem facing the company is that while it still costs $100 to make the blender, the company can only sell the product at the competitive price of 150 euros. Which, when translated back into dollars, is only $120. 150 euros times 0.80 equals $120. A stronger dollar resulted in a much smaller profit than expected. The blender company could have reduced this risk by short selling the euro and buying the US dollar when they were at parity. That way, if the US dollar rose in value, then the profits from the trade would offset the reduced profit from the sale of blenders. If the US dollar fell in value, then the more favorable exchange rate would increase the profit from the sale of blenders, which offsets the losses in the trade. Hedging of this kind can be done in the currency futures market. The advantage for the trader is that futures contracts are standardized and cleared by a central authority. However, currency futures may be less liquid than the forwards markets, which are decentralized and exist within the interbank system throughout the world. Forex for speculation. Factors like interest rates, trade flows, tourism, economic strength, and geopolitical risk affect supply and demand for currencies, creating daily volatility in the forex markets. An opportunity exists to profit from changes that may increase or reduce one currency's value compared to another. A forecast that one currency will weaken is essentially the same as assuming that the other currency in the pair will strengthen because currencies are traded as pairs. Forex trading, a beginner's guide. Trading currencies can be risky and complex. The interbank market has varying degrees of regulation, and forex instruments are not standardized. In some parts of the world, forex trading is almost completely unregulated. The interbank market is made up of banks trading with each other around the world. The banks themselves have to determine and accept sovereign risk and credit risk, and they have established internal processes to keep themselves as safe as possible. Regulations like this are industry imposed for the protection of each participating bank. Since the market is made by each of the participating banks providing offers and bids for a particular currency. The market pricing mechanism is based on supply and demand. Because there are such large trade flows within the system, it is difficult for rogue traders to influence the price of a currency. This system helps create transparency in the market for investors with access to interbank dealing. Most small retail traders trade with relatively small and partially unregulated forex brokers, which can, and sometimes do, re-quote prices and even trade against their own customers. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go.